Hey guys, Kai Leonard, Luxon Realty Group with Keller Williams. And want to put together a little thing of questions I get asked, a little bit about credit, what do I need to buy a home, that type of stuff, from a lot of friends, family, people like that. Big one I get all the time is, a little cheat sheet here is, what is a good credit score to buy a house in California? People tend to think they need to have this like 760, 780 credit score to buy a house. But reality is the credit score of 620 or higher should allow you to qualify for most mortgages. Now, yes, if you have a 760 credit score, you're going to get a much better interest rate than a 620 credit score or even a 680, but it doesn't mean you won't qualify for the home. Now, again, if you can get that credit score up to those 750, 760 numbers, 1 point, 2 points, that's a lot of money. I mean, you're saving tens of thousands of dollars. So I do encourage you, if you can, get a higher credit score at the time to do so. Or if you can get in at any time now, you can always build your credit. Buying a home will help you build credit also. And that can increase your credit score, and you can always refi. Can I get a mortgage with a credit score of 600? Well, yes, you can. FHA loans require a 580 or above. So yes, you can get a home loan with the 600 credit score, but again, you're going to need money down, more money down, and your interest rates are not going to be as favorable of those who even have a 680 or a 700. And then again, 760 on up, it's even better scores. So another question I get is, how much can I afford? I make $60,000 a year. What can I do? So I ran the numbers here on 60 a year. So the rule of thumb is how much of a mortgage can I afford? It's 2 to 2.5 times your annual income. So you're looking at $120,000 to $150,000 if you're making $60,000 a year. Now, I would say that's true. That's a good rule of thumb, but I sell a lot of houses to a lot of people, especially in Orange County, and we're looking at $1 million plus. I don't think that as many of these people buying these $1 million homes are really making $500,000 plus a year, or even $400,000 to buy these homes. So rule of thumb is, 2.5 times, but you get with the right mortgage lender who can work with you on what you earn, and we can get things done that way. If you want any mortgage people to deal with, I can put you in touch with put you in some here. I also have a great mortgage lender down in San Diego that I can refer you to as well. So now that we know you can get a home even with a 600 credit score, a 680, a 620, whichever it is, even a 580. Can you get one lower? Yes, it's not going to be FHA approved, but yes, you can. Now that we know that you can get the loan, let's talk about how important it is actually to have the credit. Because like I said, the difference in your interest of 1 point, half a point, all that, I mean, that's tens of thousands of dollars a year. So how can I fix my credit quickly to buy a house? So you want to fix your credit and raise your credit score. That's the main thing. So the first thing you do is start to reduce your credit balances. It's like less than a third. I think it's 20% or something is what you want to carry on a credit card. Anything over that starts to affect your credit negatively. Do you want to pay off your credit cards 100%? Not necessarily, because then you're not showing that you can handle any sort of payment on a monthly basis. So, if you can just bring those down to about 10% of your interest, let's say you have a $5,000 credit card, keep that down to under $1,000 a month, make your payments. I mean, if you can't afford to pay everything off every month, at the end of every month, that's going to help. But as long as it's down to like $1,000, you're going to do pretty good here. Another way to quickly raise your credit score, there are 3 ways. And another is to get added on to someone's primary account, a family member, a friend who trusts you, to add them on as long as they've had a good credit history, say 10 years of good credit history. They have a nice high credit score. When they add you on as a user on the card, then their credit will actually transfer onto your credit, giving you a nice big credit bump. And that's important because part of your credit is the age of your credit cards and how long you've had this. So having a long history of credit card and having a good, well paid on time history is important. Though credit bureaus understand that we are human and that having a missed payment here or there can affect things, but not greatly. So that's another big one. So you want to be an authorized user on someone's account. The other is get a copy of your credit report. Try to erase any misinformation. I'm not telling you as a credit repair person, I'm not telling you as a loan officer, but even if you have some late payments, you can go ahead and challenge them, see if they will take them off. There are a few tricks I've heard around the line say you have something that's 2 or 3 years old. If you live at a different address, go ahead, contact the credit bureau, ask them to remove that address, the old address, off of that history. And by doing so, that sometimes tricks the system into not having that trail you. It's not 100%, but sometimes that happens. Another trick is a trade line. That does cost you money, but you can pay a trade line company. They will add a trade line onto your credit history. Usually it's only maybe 2 or 3 months. It does cost you some money. By doing so, it makes it look like you have a nice big $50,000 worth of credit that is not used up, but also paid on time for many, many years. And doing so will give you a nice big credit jump. But remember, it's going to take about 30 to 45 days to show on your credit. Then it's only going to be there for about 2 or 3 months, then they're going to take it off. So when you apply for a loan and you buy your home, they're going to check your credit when you apply. They're going to check your credit when they then approve you. And then right before closing, they will check your credit again. That's why it's so important. Do not run out and buy a car or furniture or just open a Macy's card for the extra 10% off. Do not do that until you own your home. So that's another trick there. But any credit card lates, anything like that, if you go ahead and just, I didn't do this, they have 30 days to reply, then 5 days if they don't hear back from them to take that off your credit. Another little trick I've heard about is if you have some medical collections on your account and it's gone to a third-party collector, contact that third party and ask them if they have the proper HIPAA forms in order for the doctor facility to share your medical information with them. Again, another trick that sometimes works. If they don't, again, that needs to be taken off. You can request in the credit bureau to remove that, because it does not mean you don't owe that debt, but it does mean that they should not have shared that private information with them and put it on there. The other is if someone bought that debt and they do not have the original wet signature showing that you applied for it, it should be removed. Now, with that said, credit bureaus do a lot of things electronically. If the creditor says, nope, did it, have it, even though they don't show it, I've seen the past where the credit bureau just doesn't care and they'll just keep reporting it. So sometimes you have to go right to that creditor and ask them for that signature. Could be many years old, so we'll see. What credit score is needed to buy a house in 2021? Well, you need a 500 credit score or better. FHA won't touch you, and I don't know many lenders that would, but supposedly there is lenders out there that will go with a 500 credit score and see what happens. I don't know what your interest rates would be, but it can be done. Though if you are to buy something and you can get in, the sooner you get in and buy something, the sooner you start building equity, the sooner you start building credit. And that is a major thing. Again, should I pay off all my debt? I don't necessarily think you should pay everything off, pay it down. You may need that money toward your down payment. So let's say you have 5 credit cards. Altogether, you have $20,000 in debt. Should you pay all 20 off? Well, if you can bring all of them down under their 10% or under 15% of the credit usage, and by doing so, you can keep $10,000 liquid, then it would be important to keep that 10. You may need that for buying a home, buying it down. Maybe you don't have to put the principal interest payments or something, so you could try for there. So just a few questions I've been asked, and I wanted to touch base with those of you and see if there's anything I can do to help you. I'm not asking you for the business. I would love to earn your business. But if you do have some questions, you'd like to ask me as a friend, as a family member, just as someone you're just seeing the video and are thinking of buying a home, I'm willing to give you my advice. I'm not an attorney. I am just a realtor, and I'm not a credit repair person either. I just learned a few tricks along the way, so it would be up to you. But DM me or give me a call at 949-299-2702. or if you want to text me, it's 949-627-7733. You guys have a good day, and I'll talk to you soon.